There are quite a number of taxes that people think are new, but they are not actually new. To a few people, they might be looking like new taxes, but it's actually extending to those who are not there. You are looking at the tax like on the mobile money platforms and transactions. There are already platforms that we are paying, and there are a few platforms that we are not paying. So that's trying to extend to those new taxes. You've talked to tax, so people have said cement, but basically white cement. It's not the other normal cement, that one has already been paying tax. But we've not seeing a tax on white cement, grout. So those few things, they have added a few additional taxes. The tax on fuel is 100 shillings. It hasn't been moved really for almost a decade. So adding 100 shillings, I don't think that's going to disrupt. So people may look at it as a new tax, but just an adjustment that could have been made any other time or before. So that's basically about most of these taxes we are seeing. There are taxes on, I think, proposed taxes on capital gains tax in the real estate if you're selling land. Now some people are thinking, is this the gross on which I'm selling the land? No, the real tax should be on the capital gains. You bought this plot at 60 million, you want to sell it at 80. The 20 should attract a tax because that's additional income you did not have. You're just like another person who invested that 60 in cows, and now he's selling his cows at 80, or in business. So there are quite a number of things that are not necessarily, I wouldn't call them new taxes. It's just cleaning up a few things, but they may appear as new in a sense, like we've said, the capital gains. Some of these people have been fighting them. They come, people fight them. They come back, people fight them. So I would not say it's not a new conversation. It's an old conversation that has been brought back for consideration. Generally, there are two things. Are they the ones to pay the tax? Are they collecting the tax? And quite a lot of Ugandans confuse the two. The actual taxpayer is usually the consumer of the service. So you'll come back and say majority of Ugandans are not paying taxes, yet they are paying these consumption taxes. MTN, biggest taxpayer. No, it's not MTN. Every time I buy data, I pay tax. MTN is only collecting from me to take it to URA. But it is me who has paid that tax. Now, when you come to these small businesses, you begin to see that EFRIS is trying to track their businesses. You issue a receipt, you issue an invoice. We want to understand and see whether you should pay tax. Now, you want to ask which tax. If I'm selling beer, I'm the final man. The amount I'm going to get of 5,000 a bottle, did you collect that tax already from the manufacturer of the beer? Because me, I'm only adding my margin of possibly 1,000 or 500 shillings. So where is the tax? Is it on the 500? Is it on the 5,000? And why should I give a report? Because that issuing of a report, an invoice or receipt, involves costs to this small business entity. And many of them, by my assessment, are not challenging or complaining because of their need for data, but the cost involved is coming to them. Now, the cost is both in terms of time. To issue this receipt, remember, many of them, you're just dishing out and getting your money, dishing out and getting your money. Now, if you're saying every receipt must be on the EFRIS, every invoice must be on the EFRIS. The EFRIS needs internet. Most of these people don't pay for that much continuous internet. That extra cost that is coming to them, they need to get the app. Some of them we are told they need to get a computer, whether it's a laptop. Or these are small businesses. That extra cost, they are likely to hit back. But also they will be asking, my take is 500. Why should I incur all this extra cost to display my kind of transactions? So a number of things are not clear, but a number of things, even though they are clear, they are coming with a new cost that the traders will definitely try to resist. So we need to understand what is it that we're trying to achieve. Filing of returns should be faster. Of course, those are benefits of EFRIS. You will be seeing it is real time, but that real time comes with a cost on the taxpayer or the tax collector, whatever it is. Now, that is part of the area you want to say who meets this cost. I know even digital stamps, people had complained, but those are large taxpayers. Many of them can somehow find a way of accommodating it. But these smaller fellows, you are really entering into their small, narrow margins. They are likely to raise a complaint. It has a lot of complications, but also guidance. Ability to pay and convenience of payment. Come to me to pay tax when I have the money. And I think that's partly also the challenge on EFRIS. You issue an invoice, even a receipt, it does not mean I've received the cash. Quite often people used to write a receipt and say the item was 8 million, you have paid 4. But if I issue this receipt of 8 million, URA will think I received the 8. But in actual sense, I have written on the receipt balance to be paid. Now, which tax should I pay? On the 8 or on the 4? And remember, small businesses, that cash is important for them for day-to-day survival. So some of them are hitting back to say the moment I issue a receipt, URA says pay. The moment I issue an invoice, URA says pay. But there's no cash in my business. So what am I going to do? Because the person paying the tax, as we've said, is the one buying the item. But that person hasn't paid the full amount. So am I going to pay tax on behalf of the customer? I don't have that money. And we've seen very many people being inconvenienced, having to go to the banks because they want to keep their business running. And URA is saying, I'm closing you. So they run to a bank, pick a loan, a money lender, pick a loan, and pay the URA to continue their business. But as they continue their business, they are generating again the same problem. So where do I end? So we need to understand the nature of business here in Uganda on when does a person actually get the money for them to be able to pay the taxes. But also you want to come back, as we've said, who actually paid the tax. It should be that consumer. Now, at what point should this tax be collected? The digital stamps is tracking at the manufacturer's level. Now you may find when I said an item here, it already includes the tax component, which possibly the manufacturer has paid and passed on to the price as they were selling to us. You want to avoid taxing on a taxed item already. Because if the tax was picked as excise or even as customs, you know, like now you have I think one of the other contention of the traders is the mivomba, used clothes. They are saying the tax is in kilos. It should be on value. Because kilos, some of these items have very little value, but they are heavy. This is a raincoat. This is a jean. And moreover, the jean may be damaged. So what happened to taxing based on value? And who is going to pay this tax? If the goods have already come in from outside and they are being taxed at the bale level. Now, when we are buying the bales, as they have been cut and all sorts of things, already this person who paid the tax at Malaba or Mombasa or wherever is passing on this tax component to us, the retailers. So what do you want from us, the retailers? Ours should only be business income, not the tax on the items we are selling. Because those items have already paid the tax. Only charge me my business income because I've bought this item at 10,000, I've added my 200. But the 10,000 included the tax that was passed on me. My only business is the 2,000. And so you want to assess me not on the basis of gross sales of 12,000, because the 10 went out. Now, URA, I can hear them saying, we need that record. 12 what went out so that we can sort out. But then it takes us back to transaction costs. My own is like a small business. To generate business records, it's not that I didn't want to. It's a costly process. And I think that's why many Ugandans again say, we are informal. Now, formalization comes with a cost. So the benefit of formalization must overpower the costs of formalization. And for many SMEs, the benefits of formalization are too low to cover the costs of formalization. So I can't be on the internet. Internet is expensive, the gadget is expensive, some of these people, the phones they have are cheap. They cannot even do all the transactions, the internet is off, what am I supposed to do? But even the time for me to enter every receipt, every invoice, man, what I'm dealing with is a fast-moving business downtown. So how do we rationalize those? So I think conversations should be based on understanding the business, not coming from these people that don't want to pay tax. No, there are people who have been paying tax anyway, but now it is the mode of paying the tax. That is their problem. But also explain to them, what is this tax you're bringing? Is it a tax on an item that has already paid tax? So is it a tax on my business? Those clarities need to come through. I think it's counsel to the businesses in as much as possible to keep their records. And some have been trying to. But that said, at what point do we want to engage those records to understand that business? Real time would be the best. But real time, even the banks took time to get to it. So you want to give it time. Real time means we all go on the net. As you transact from your bank, automatically a record goes that you have done that transaction. You will even receive an SMS on your phone. That's real time. Big banks can afford it. So we need to gradually, as we nurture these to get their formalization and records and understanding the business, we need to get to a level to say, how do we phase, what support do we give them, but also what is the benefit? There are certain businesses in this country that are going to remain informal in the sense, but that does not mean they are not being visible. Because in any case, you don't even want to come and see them. As we always say, you don't have to see where the rat is. You just put the poison where the rat will pass. Now, if I'm selling beer, you don't have to know who is selling beer in village X, but you know how much beer has been sold, because that record is with breweries. So how far should I go to try and understand the business that is happening within the economy? Because the deeper you go, it becomes a bit more messy. It will cost you as URA. You'll have to have a fleet of staff. You'll also cost the taxpayer and the businesses to the extent that you can break them. But also, as we've said, the businesses are in trying times. Inflation may have gone down, but the prices have not. Now, for anybody whose income has not increased, their purchasing power of the amount of money they have been receiving over the last 2 years has gone down. So businesses have also begun to sell less because the consumers are buying less. Now, with businesses struggling at that level, how much money do you want to pick from them for tax purposes? How much money do you want to leave with them for survival? Because the businesses must first of all survive. They are not just there to exist to pay taxes. They are also there to exist to look after their owners and propel the economy forward. So we need to get that trade-off. Yes, we need to get that trade-off. That I may not fish out all the fish. That's why even in fishing we say there must be a threshold. Immature fish get arrested. So what are the immature businesses? What are the small mukene? What are the small plankton that you must not even fish, but allow the big fish to eat them? Then you catch the big fish. I think we need some more understanding of the current state of the economy and how do we balance taxation with business, which is actually economic survival. Yes.